Hello everyone, am I audible? Can you hear me?
Yes, sir.
Okay. So yesterday we have taken the discussion on the format of income statement. We discussed about each item, right from net sales top line to bottom line profit and then EPS. Today we are going to start our discussion with the balance sheet. Okay. So what is balance sheet? So these are the topics that we are going to cover. Okay. So balance sheet. It shows the financial position of company at one point of time or on a particular date. Now, in the balance sheet, on the right side, we have assets, and on the left side, we have liability. Those assets can be divided into current asset and long-term assets. So, let's first talk about current assets. What are these current assets? These are the assets which can be consumed, converted, or realized in cash within one financial year or operating cycle, whichever is higher. So current asset period. Operating cycle and financial year. So current asset period would be 15 months if operating cycle is 15 months and financial year is of 12 months, whichever is higher. And if this is the situation like operating cycle is for let's say only 3 months and financial year is 12 months, in that case, current asset period will be 12 months because whichever is higher. So those assets which will be consumed, converted or realized within one financial year or operating cycle, though they will be called current assets, right? Now, what do we have in current assets? Cash. First is cash. Second is cash equivalent. Then we have marketable securities. Then accounts receivable, inventory, prepaid expenses, accrued incomes, deferred tax assets, others. You may have loans and advances also. Then you will have total current assets. So cash is what? Cash in hand and cash in bank. Cash equivalent like demand draft, like some bearer check, FD, or anything which has no risk of value and will be converted in cash in less than 3 months. Any investment which will be converted in cash and there will be no risk and it will be converted in 3 months. So that will be cash equivalent. Market security, shares, bonds, mutual funds, other investments which will be converted in cash in less than 12 months. Account receivable. This is your credit sales. When you sell something on credit, it is recorded as account receivable. Like you sold for 1200, you received 1000 in cash, so 200 is still receivable. So that 200 will come here, right? 1200 was your sales, cash received 1000, so 200 is your accounts receivable, that is AR. Inventory, anything purchased to resale is inventory. What do we include into it? We include raw material, work in progress, finished goods, loose tools, prepaid expense, advance payments for, let's say, advance rent, subscriptions. Okay. Advance salary. It can also be this thing. So anything for which you have paid, but services have not been given to you. So you will not report it as an expense. You will show it as an prepaid expense. Once the service is received, then this item will become zero, and in the income statement, you will show your expenses. Next is loans and advances. So advances paid for inventory. You want to purchase some inventory and you have paid something in advance. So that will be reported here. Advance payment for some fixed assets. You have ordered for some machines. Okay. Loans given to corporates, employee, suppliers. So any kind of loan which you have given will be reported here. And if you have taken some loan, that will be reported on the liability side. Loan paid and loan given to someone against which you will get some kind of interest. So that will be loans and advances. And if you have taken the loan, then it will be reported on the liability side. Accrued income. These are incomes earned but not received. What does it mean? You have earned it, but you have not received it. So something like dividend receivable, interest receivable, rent receivable, or other any kind of receivable, but other than trade receivable. Trade receivables will come here. Other than your these receivables, you can report them here.
So trade receivable.
Trade receivable means credit sales, your core business. You are in manufacturing process. Okay, so if you are manufacturing something, you are selling on credit, so that receivable will come here under account receivable. Other than that, if you have other receivables, then you can report them here, like accrued incomes. Deferred tax asset, I told you yesterday, if it has to be adjusted within 1 year, show it under current assets. If it is long term, then show it under long term asset. Now, others, and these items can also be reported here under others. Now, long term assets. The first item is investments. So if it is a short term investment, show it as marketable security. If it is a long term investment or long term market security, show it under investments. So same, these items will come here. The only difference is shares, bond, mutual fund that will be converted into cash in more than 12 months. Earlier it was less than 12 months. Loans and advances, property, plant and equipment, net. So first you will have gross fixed assets, minus accumulated depreciation, you will get net property, plant and equipment. And what do we include in this gross value? Value of land, building, machines, furniture, fixtures, equipments. Okay, all tangibles only. Minus accumulated depreciation on all these items except land. Land will not be depreciated, but these items will be depreciated. But the value of land will be included in gross. For example, just to show you this thing. land, building, machines, furniture, etc. So you have some values here. Let's suppose 500, 200, 300, 100. So total value is this. Now we have to depreciate. This item will not be depreciated. Rest everything will be depreciated. Let's say, for an example, 10%. So this is your depreciation. So what is my net value now? This minus this. Very simple, right? So we have not depreciated land, but other items have been depreciated with respective rates. Proper formula will be written. Proper life, salvage value. You understand salvage value, scrap value. Everything will be written, and then a complicated, or let's say comprehensive depreciation schedule is created. Then the values come. Come back here. After this, we have intangibles net. What do we have in intangible? Trademark, patent, copyright, intellectual property rights, and softwares, recipes, some kind of formulas, anything, and goodwill. Customer list, etc. Intangibles are amortized and fixed assets are depreciated. Okay. Then deferred tax asset, if there is any, and then equity investments in associates. Like in income statement, we had equity income from associate. In the balance sheet, we have equity investments in associate. Others. Now what do we get? Total assets. This total asset will actually include total current assets also. Right? Done. Now, after the assets, we want to move to current liability. Current liabilities are those liabilities which you have to pay within one financial year or operating cycle. When you take advances from your customers, it is advance receipt. When you pay to your suppliers or someone, it is prepaid expense. Okay, so here I can write advance received. When you take payment in advance before delivering the services, it is advance received. When you pay before taking the services, it is prepaid expense. Advance received, or you can say unearned revenue, or you can say deferred revenue. If you purchase on credit, it is accounts payable. If you sell on credit, it is accounts receivable. Then we have accrued liabilities. Salary payable, rent payable, interest payable, dividend payable, tax payable, advertisement payable, and other payables. All types of payable other than accounts payable, other than trade payables. Trade payables will be reported here, but rest of the payables you can put in one line, or you can put some of them here and some of them you can show separately, like you can show dividend payable separately, interest payable separately. So it is your choice. Then we have, let's say, deferred tax liability. Short-term debt, current portion of long-term debt, others. If you add them up, you will get total current liability. Now, then we have long-term liabilities. Under long-term liabilities, you can see all of these items. These are coming under current liability because you have to pay them within 1 year. If the same items you have to pay after 1 year, then they will be reported under long-term liability. So you can show all of them here also based on the payment conditions, right? So here I will write something, pension liability. This will come later. You will show long-term debt. Accruals or accrued liabilities. Deferred tax liability. Others if there is any. Then you will show total liability. After your total liability, we will have equity section. And this is important. In equity section, we will have preference stock, common stock, additional paid in capital, retained earnings, accumulated retained earnings, then we have treasury stock. This will give you total shareholder equity. You will add minority interest. You will get total shareholder equity.
Excuse me, sir.
Yes,
So what is deferred revenue?
deferred.
Revenue under
Deferred
current liabilities,
when
please.
you are taking payment from someone in advance, it is called deferred revenue. It is called unearned revenue. It is called advance received.
Okay, sir.
Now let's discuss what these items are. What is preference stock? Preference stock is the face value of preference shares. And what is this? Common stock? Face value of common shares. Additional paid-in capital will have three items. One is security premium. Let's suppose you have issued 100 shares of 50 each, where face value of one share was 10. So what will be the common stock? 100 into 10. And what will be additional paid capital? That will be 100 into 40. Because the issue price is 50 and total number of shares are 100. Face value of one share is 10. So security premium is 40. What is security premium? When you charge a price above the face value from your equity investors, that additional amount is the security premium. Right? Okay. Security premium plus there is an item called stock based compensation, which I'll talk about in some time. Stock based compensation plus options proceeds. Once you convert option, there is a price that you receive. That price is called strike price, right? Exercise price. So that amount you will show here as option proceeds. Then we have retained earning. The profit minus dividend is called retained earnings. So what you will do, you are having a profit of let's say 100, you distribute 60 as dividend, so 40 you have retained. Next year also 200 rupees of profit minus 80 rupees of dividend, 120 you have retained this year, so total will be 160. So what is happening? Every year, whatever amount you are retaining, that will be added here. Okay. Other comprehensive income, we'll talk about it. Treasury stock. Amount spent to buy back own shares. When a company buys its own shares, amount used to buy those shares is treasury stock. And units shares purchased are treasury shares. Okay. So here we are actually reporting amount dollar. Okay. So in the first year, let's suppose you purchase shares for 1200. Then in next year you purchase for 1500. Total amount that is 2700 will come here. Right? So if you add these, you will get shareholders equity. Next we have minority interest. So this shareholder equity is the parent company's equity. But there are subsidiaries also. In those subsidiaries, you may have investment of someone else. So that investment, which is not owned by parent company, is minority interest. So let me write here. Part of equity of subsidiary, which is not owned by parent company, is minority interest in consolidated balance sheet. Done, everyone? Next, we have cash flow statement. So what we are left to discuss? We have to discuss about other comprehensive income loss. We have to discuss about stock-based compensation. These two items we have to discuss, right? So we'll talk about this. Let's take a look at cash flow statement now. In cash flow statement, there are three activities. One is cash from operations. Second is cash from investments. Third is cash from financing. So to prepare the cash flow statement, there are two methods. One is direct, another is indirect. We maximum times prepare indirect method of cash flow statement. So that will start with profit. Before we continue, I have a question from you. We were discussing about consolidation method. In which situation there will be no minority interest? First concept, in the parent company or in the subsidiary, minority interest will not be there. Minority interest comes when the statements are consolidated. When it is standalone, either for parent or for subsidiary, there will be no minority interest. When you are combining these two companies, then minority interest come, and it will come only when parent company has less than 100% stake in subsidiary. If a part of subsidiary is not owned by parent, so that portion which is not owned by parent is minority interest, and that will also come only when it is a consolidated income statement. Got it? कोई रेस्पॉन्स नहीं है, कुछ नहीं है, बोल देते नहीं है. मैंने पूछा ना भी, गॉट इट? कुछ जवाब आया?
Yes, sir.
Profit. We are starting to discuss cash from operations. So we can start with profit, or we can start with profit before tax. Both options can. Now my question is, which profit you will take? Before minority or after minority? After minority. What about online students? Profit will be before minority or after minority? It will be Let them also respond. Right, it will be before minority because our income statement is consolidated, balance sheet is consolidated, cash flow is also consolidated. So why only profit will be after minority? So it will also be before minority. So including the effect of subsidiary, we will take that. So we will add non-cash charges. What are non-cash charges? Depreciation, amortization, stock-based compensation, depletion, impairments, some kind of non-cash provisions. They will be added. And then after that, we have change in current assets, change in current liability, and then there are several adjustments. Adjustments like interest expense. We will have to add it. Dividend income, we have to deduct it. Right? So why we actually have to add interest expense? Because interest expense is something which is deducted in the income statement and it is a financing activity. My profit, which is, let's suppose, 500. This profit came after deduction of depreciation and amortization. So we have to add that 100. Why we are adding? Because it is deducted, but there is no cash outflow. So we are adding it back to calculate actual cash that we have. Right? Change in current assets. Again, a part of your profit is blocked in current assets. In last year, we had, let's suppose, 100 rupees of current assets. Now we have 140 rupees of current assets. So what may have increased? Inventory may have increased. Account receivable may have increased. Our short-term market security may have increased. So we have increased something. So money is blocked in current assets. So what I will do? I'll write minus 40 here because my money is blocked in current assets. Same way, it is possible that earlier our current liability was 70. Now the current liability is how much? 90. So current liability has increased by 20. So liability has increased. So it is a source of cash. If liability decreases, we have paid liability. So it is a use of cash. So if liability goes up, you will type plus. If liability has gone down, you will type minus. So in this case, I will type plus 20. In case of assets, it is opposite. If assets goes up, you will type minus. If assets have gone down, you will type plus. Clear? Interest expense is, let's suppose, plus 50. Why I have added plus here? Why I have written plus 50? Because this profit, this interest expense was actually deducted in the income statement. After deduction of interest expense, the profit was 500. Right? I will add it because I am trying to calculate operating cash. So this was financing item. It affected my profit. I am simply adding it back to remove the effect. हिंदी में सुनेंगे ये 50 रुपए इनकम स्टेटमेंट माइनस कर रखे थे, फाइनेंसिंग एक्टिविटी है. अगर मैं इसको जोड़ूंगा नहीं तो मेरा कैश कम आएगा. क्लियर? Same way, dividend income was added in the income statement. So profit increased. So I have to deduct it. So how much dividend was actually added in the income statement? Let's suppose 60. So I am simply deducting it. Clear? I will re-add this in investing activity. I will deduct this interest expense again in financing activity. So I am adding it in operation. I will be deducting in it financing. Dividend income I am deducting here, but I will add it back again in investing activity, right? So there can be many more items such as gain on sales of asset. So we had an asset of 100. We managed to sell it for 120, or let me make it 130. So 30 rupees is gain on sale of asset. So this 30 I'm going to deduct. Okay. Why this? Because 30 rupees was added in the income statement. So that increased my profit. If I don't decrease this 30 rupees, then that 30 will be added in cash flow operation. And it is including investing activity, which is wrong. हिंदी में 100 रुपए का आइटम था, 130 रुपया बेच दिया, 30 रुपया प्रॉफिट हुआ, गेन ऑन सेल ऑफ एसेट हुआ, वो 30 रुपए मेरे प्रॉफिट में जुड़ा हुआ है। अगर ये 30 रुपए में घटाऊंगा नहीं तो वो मेरे ऑपरेटिंग कैश में भी जुड़ जाएगा, तो कैश क्या हुआ, बढ़ा हुआ दिखेगा, जो कि गलत है। कितना आसान हुआ ना हिंदी में समझाना। हाँ, वहाँ प्लस है तो माइनस कर दो, इनकम शेयर माइनस है तो यहाँ पे प्लस कर दो। क्लियर? बहुत एनर्जी लगती है इंग्लिश में। एक तो हिंदी के शब्द ना जबान पे टिके हुए हैं, चाय पीते पीते बोल सकते हैं, है ना। इंग्लिश में थोड़ा सा मेंटली एक्टिव रहना पड़ता है कि क्या बोल रहे हैं। Is this clear to everyone? Comment in the chat. You can note it. I'm giving you 2 minutes of time to upload. तो इंग्लिश में कितना बोलना पड़ा? प्लीज नोट इट, आई एम गिविंग टाइम। और हिंदी में लिख लो भाई। Sanskriti, if there is a loss on sale of asset, then in the income statement you will put expense. Okay. In cash flow statement you will add it back in the operation, and in investment you will deduct it again. Is that clear?
Yes, sir.
Okay. आदि पुरुष किसने देखी है? आदि पुरुष? अरे भाई मत जाना, देखने लायक फिल्म नहीं है। देख ली, बाकी चीजें देख ली ना। बनता नहीं है, लोगों को ना थोड़ा तमीज सिखानी पड़ेगी। आप किसको क्या दिखा रहे हो, किस तरीके से दिखा रहे हो, वो तमीज उनको बतानी पड़ेगी, जब उनका नुकसान होगा। हालांकि उनको कोई फर्क पड़ेगा नहीं, ये मान तो अभी भी नहीं रहे हैं, नहीं देखेंगे। लेकिन इतना ज्यादा नेगेटिविटी जनता खुद फैलाए, ऐसी फिल्म हमने देखी नहीं थी। मतलब ऐसा कभी वो नहीं था। टीवी वाले बोलते रहते थे नेगेटिव पॉजिटिव ये वो, लेकिन पब्लिक खुद ये सब बोलने आ जाए, ऐसा नहीं देखा था हमने। आदि पुरुष मतलब पता नहीं क्या बना दिया, जैसे हॉलीवुड फिल्में नहीं होती हैं,
Marvel story.
उस तरह ही कुछ बना दिया फालतू, सारा VFX है, उल्टा सीधा, सांप लेट रहे हैं, बंदर वैसे दिखा रखे चिंपैंजी जैसे, है क्या नहीं, अच्छी चीज थोड़ी है। Okay, now we are going to talk about investing activities. So first of all, purchase of mutual funds, bonds, shares, or other investments. That will come with a negative sign. Let's say negative 700. Then sale of mutual fund shares or everything 750. Now here you have to understand one thing. What is that? You don't want to write the net effect. Let's say plus 50. No. You have to write both. Purchase of investments and sale of investment. Both you have to write. Similarly, purchase of fixed assets, let's say minus 600, and then sale of fixed asset, that is plus 130. This 130 has come from here. Clear? Then dividend, rent, interest received, because these are your investing activities. So plus whatever amount, 150. You will get cash from investments. Mutual fund. MF is mutual fund. Operating, investing, financing. देखो ये वाला पोर्शन है, दिस इज ओनली ऑपरेटिंग. मैं इसको थोड़ा और बाइफिकेट कर देता हूँ. अब ठीक है. ऑपरेटिंग, then investing. Now we will discuss about financing. क्लियर हो गया ना भी, ऑपरेटिंग, इन्वेस्टिंग, फाइनेंस. ये एक्चुअली इन एवरी बैच लिटिल कंफ्यूजिंग. वो सब एक ही उसमें आ रहा है ना, कि कहाँ पे जा रहा है, कैसे हो रहा है, थोड़ा हो जाता है. So we have to do it. Next is dividend paid. Now where am I writing it? Under financing. Dividend paid, interest paid, equity issue, equity buyback, and then debt, borrowings, repayments, debt repayment, loan repayment. चाय पिलाओ इनको, चाय पियो अपने. Option proceeds, dividend I have written. However, dividend means preference dividend, common dividend, minority dividend, all three. You have to write, right? Then what will happen? You will get cash from financing. After that, you will see surplus or deficit. That can be 1 plus 2 plus 3. What is this? This is third. This was second, and the above one is first. So if you add up all these three, you will get surplus or deficit. Then you will get opening cash balance. Then you will get closing cash balance transferred to balance sheet. So can I take 5 minutes of break? Till the time you just go through income statement, balance sheet and cash flow, because all three statements have been done now. Okay. Nahin, please ma'am, understand this. Dividend paid minus interest paid minus equity issue plus equity buyback minus debt borrowing plus debt repayment minus option proceeds plus. So cash coming in plus cash going out minus. You are selling assets plus you are purchasing assets. Assets are coming, but cash is going out. So we are talking about cash here. Assets coming, add to balance sheet. So I'll be coming in 5 minutes. Till that time, not it. Okay. So we were talking about ChatGPT and LinkedIn. You can use ChatGPT to write your content on whatever topic and post it on LinkedIn. You can use the content which we are teaching in class and post it on LinkedIn. What happens? You are crediting your account this way. 1 month or 2 months down the line, when you will apply for certain job through LinkedIn or through job portals, those HRs will visit your LinkedIn profile and there they will not find anything about you. So they will reject you straight away. What happens in office? The very first option for recruitment is internal reference. People who are working within the company, they ask them to share the resume of their friends, their relatives, if they are interested for the profile. So 10-20% jobs are filled through internal references. Let's say there are 10 job openings. So 2-3 people will come from internal reference. Rest they will hire from outsiders. So the next best option is LinkedIn. So they will come on LinkedIn, they will search with some keywords and they will find your profile. They will visit that, they will study what you have posted, what is written about a section, about me section on LinkedIn, right? And they will not find anything special. So they will skip you and they will find the next better option. So what I'm saying here, before they come to your profile and reach your profile, and reach means make it better. Try to feed as much as content you can, at least once in 3 days. This way, there will be more people who will get connected with you. They will follow you. They will send friend requests. And when you will use hashtags, people who search with certain content with those hashtags, your profile is likely to come above. HR will also find people with those keywords. If those keywords are there in your profile, then they can visit your profile. And if they like your profile, they will call you. But it is not a one-day job. It is a regular process, which you should keep on doing. Is that clear?
Yes.
Yeah. So now we are continuing our discussion with cash flow statement. My question. Company issues bonus shares. Where will it be reported? Operating, investing, or financing?
Yes.
Investing, financing. Okay. Now let's suppose company goes for stock split. Where will it be reported? Investing. Okay. Third, debt has been converted to equity. Where it will come? Tell me. Where will it not come?
So financing.
Okay, financing. Sure. Now one more. There is an item cash. You have converted it to. Okay, there is an item which is cash equivalent. Cash equivalent to cash. Where this will come? All these four activities will not come anywhere in the cash flow statement. First, owner shares. Where is the cash inflow or outflow? No cash inflow, no cash outflow. So this will not come in cash flow statement. Similar stock split. Two stocks are divided into four stocks. Where is the cash inflow or outflow? No cash. Now debt has been converted to equity. Only an accounting entry. Where is cash inflow outflow? No. Now this is also one that kind of item only. Earlier 100 rupees of cash equivalent was there. Now there is a cash of 100. So what is the change? So this item will also not come under cash flow statement. Is that clear? Why? Cash flow statement shows only cash transactions. Did you get that? Now, one more thing about cash flow statement. If cash flow statement does not show interest paid and tax paid clearly in cash flow statement, then show it below cash flow statement. What am I saying? If cash flow statement fails to show interest paid and tax paid clearly, then show interest paid and tax paid clearly below the cash flow statement. That means here, closing cash has come. Just below that, write interest paid and write tax paid. Why? Because these two items are not clearly coming in the cash flow statement for whatever reason. So you show them separately. It is a rule. Okay, noted.
साइड का डी को 12th क्लास में नहीं समझा
कि किसमें
12th क्लास में था ना मैंने
12th क्लास में डीप क्यों पढ़ाएंगे सर? क्लास 12 होती है। ये बोलो इतना MBA में नहीं पढ़ाया, वो तो ठीक है, इतना MCOM में नहीं पढ़ाया, वो ठीक है, नहीं पढ़ाएंगे। मतलब क्यों पढ़ाएंगे? मैं भी नहीं पढ़ाता तो मेरा भी काम चल जाता, आपका नहीं चलेगा। Clear? So from my side, I am trying to cover maximum topics which I can teach during the time allowed available. So now let's proceed. What we are going to talk about now? Cost sheet. Cost sheet and then stock-based compensation and balance sheet consolidation. Okay, let's do balance sheet consolidation first and then cost sheet. All of you have written? Hello? Done online?
Yes, sir.
Okay. So now here we have company P and we have a company S. Company P has current assets of 5,000, long-term assets of 4,000. Total is 9,000. Current liability 2,000, debt 1,000. Its equity is 6,000. Total is 9,000. Now, company S, it's a separate company, but company P is the investor company. Company S is the investee. Do you understand that? So here we have, let's go 2,000. Here we have 3,000 total color. 1,000, 1,000, 3,000 total. Now company P has, let's suppose 40% stake here. Okay. Now this can be minority active. Can it be or not?
Yes.
Can it be a joint venture?
Yes.
Can it be a controlling too? It is possible, right? So I'm not creating 4 balance sheets here like we did in case of income statement. So with this simple example, I will be able to explain you the balance sheet of the combined firm, right? So minority active, which method we are going to use? Equity. For joint venture, proportionate. For controlling, consolidation. So here what we have, whose balance sheet is we are going to create? It is company P. Right or wrong? So if this is the situation, then this balance sheet will be considered. If it is joint venture, then this balance sheet will be considered. If it is a controlling or it's a subsidiary, then this balance sheet will be considered. Right? Now, under equity method, what we are going to do? Actually, what has happened? Company P has given 1,200 rupees and acquired 40% stake. Okay. Now, how you will report it? Let me show you. In this method, very simple. Cash has gone out and equity investment in associate will come. You have invested, cash gone out, the investment came in. That's it. If it is joint venture, then 40% assets and 40% liability will be added to the company P. And in case of controlling, all the assets and all the liability will be added to company P. Okay. So under this, what will be my current asset now? It will be 5,000 minus 1,200 because 1,200 has gone out. But you will write here equity investments in associates. That will be how much? 1,200. So total is 5,000. The rest everything will be same. Long-term assets, that will be 4,000. So total is this. Current liability, debt, equity, everything will be constant, no change. Very simple. Now in this case, what will my current assets? Cash 5,000 minus 1,200. These are my own assets. Plus, this is a proportion method. So 40% of this I will add. Clear? Now this will be 0. But here, these are my own assets plus these assets. But 40% of this. Because this is a joint venture in this case. In joint venture, what does happen? Company P and company Q will come together and form a new company and name it as company S. Clear? So, total. Now, equal to my own current liability full plus 40% of this. Control D. But when it comes to equity, I will take the whole equity plus this. But nothing, 0%. Why? Because 1,200 rupees, which is there in this 3,000, is actually added in 6,000 also.
Already included.
वो already included है. Let's suppose I started a company P. I invested 6,000 here. Company did not need that much investment, that much amount. So what it did, it invested somewhere else. So my equity remains 6,000 only, or does it increase? I invested 6,000 here. It company P transferred that to somewhere else. How much is my equity? 6,000. So that 1,200, which is included here in 6,000, that is also included here.
Yes.
So, but I'm not going to add it again. I will add again. If 6,000 I invest here and 1,200 I invest here, then total will become 72. But in this case, it will be 6,000 only. Okay. Now, finally, controlling. What do we do now? This minus 1,200 plus all the assets equal to this plus this, all the assets. Is it clear till now? Now here, all my current liability and all the company S liability, because that is a subsidiary in this case. Here also I will do the total. Here also I will do the total, but this time I will not take all the 3,000. I will take 60% of it because 40% is already added here. So into 60%. Right?
Minus 14 is 41.
Did you get it? Now, I will not report this value within one cell. Rather, I will show it separately. And this 1,800 is your minority interest. I will explain it again. I know you are not clear about it. So this part is clear. Everything is clear. This is clear. This is also clear. In this case, I am adding the equity also, but only that equity which is not owned by parent company. because which is owned, that is already added here. Right? So no, I have invested 100 rupees somewhere. I gave you 100. You gave it to someone else, let's say 40. How much is mine? 100 only. Will I again add this also and this also? No. I will add only this amount. Okay. Now let me explain you again. These are the assets of company P and company S together. Whole assets. These assets have been funded by current liability, debt, parent company's equity 6,000, other than the parent company 1,800. So this way, total is this. Now is it clear? Bolo yaar.
Yes, sir.
Listen. In next class, okay, you tell me which model do you want to cover? There are 4 models. Kellogg, Tata Motors, Netflix, and one more, Apache, APA Corporation. Out of these, easiest one is this Kellogg's. Comprehensive because lot of data is there, but easy one. In case of Tata Motors, except revenue, everything is almost easy, very easy. In case of Netflix, there are so many things. Revenue is also there, little complicated, and the model is also having additional content. In case of APA, revenue is complicated, and rest of the things are easy to understand. Okay, so if you say which one of them is complicated, actually, I would say Tata Motors if you consider revenue part. See, one thing I need to tell. When you want to make a model, the revenue item is something which is forecasted differently for all the companies. Did I make my point clear? Other than revenue, all the items, let's say 70% items are in similar nature. You can forecast, if you make one model, then you should be able to forecast 60 to 70% items of all the companies yourself without assistance. 20-30% items other than revenue, you will find that they are different. So you will have to study them, understand them, and then accordingly you want to do what you want to do. Clear? So out of these 4, one model will be covered. I was thinking of leaving Kellogg's from now. Clear? Because there is no big thing in the model, but to show it's a big model comparatively. Because we are making quarterly model here. We can make the quarterly model for other companies also, but that will become too big to handle for you. It won't be possible to cover in 3 classes. Because a lot of data we will have to bring from different quarter files. We are bringing the different quarter files in case of Kellogg's, but it's an easy process. In case of other 3 companies, it's a difficult process. Clear? So you decide, because all 4 models I have recently taught in the last 4 batches. So the cycle starts from Kellogg's, but I am thinking not to teach Kellogg's from now onwards. 1 model will be covered, 3 models you have to do yourself. Same concept in case of project finance models. Solar, office model, that is mall construction or real estate model. And then a hotel model. 1 more model I have added, that is on road infrastructure model. Out of these 4, 1 will be covered. Remaining 3 you have to do yourself. I will only help you if you need. Otherwise, you have to do yourself. If you just do one model, remaining models with 10% difficulty, you will be able to understand. Okay. You can make note. I'll just come back. So now we want to discuss cost sheet. What is the purpose of cost sheet? The purpose of cost sheet is to calculate cost of goods sold, right? So we want to calculate cost of goods sold. I generally forget to tell this thing in class, and after that I have to message you. Your homework by Tuesday night. Write income statement, balance sheet, cash flows, statement of change in equity, and this cost sheet format on paper. Take photo and upload to your group. I won't accept if you write in Excel. First, learn it tomorrow. Today, revise it. On Tuesday, write it on paper. And then submit on the group. Is it okay?
Yes.
Once you do it
Yes,
on
sir.
Tuesday, you have to do it the same thing again on Thursday. Without looking or without revising it yourself. Am I making my point clear? Okay. Now, so first, what do we need to have? Opening raw material. How much is that? That's suppose 1000. Then add purchase of raw material. So this was the closing of last year. So it became the opening of current year, right? So purchase of raw material, we purchased 4,000 rupees of inventory during the entire period. So period can be 1 year. So now this total 5,000. What is this called? Total raw material for use, for consumption, whatever you want to call it. Then less closing raw material. That's suppose 1200. So this I will deduct. Now what is this 3800 called? What is the 3800? Raw material consumed. This was the total raw material. We already had 1000 rupees of material. We purchased for 4,000 during the year. So total raw material was 5,000. Out of this, 1200 is still with us. So remaining is wasted? Not, it is consumed. Clear? Then add direct labor of 2200. If you add it, what does it become? Tell me. It becomes prime cost. So what is prime cost? Cost of material plus cost of direct labor. There are indirect labor also. So we don't include that. Okay. That indirect labor or other factory related cost you are adding here. Factory overheads. That is for 4,000. What do we include in this 4,000? Let's say power, fuel, or what? Factory rent. What else? Guard, quality in charge, production manager, other thing. I think factory related any kind of cost you add in factory overheads. Clear? So this becomes work in progress. Okay. We have not yet reached to the final stage. Production. No, we are in still process. Now what you will do? Add opening work in progress. So that is, let's suppose 2000. So how much is total now? 12,000. Total work in progress. Now this was the work in progress earlier. This much work in progress current year. So this is our total. Out of this 12,000 of work in progress, in this all year also we will have left some work in progress. So that is, let's suppose 2,500. This is your closing work in progress. So this has to be deducted. Now what is this called? Out of total work in progress, we deducted closing work in progress. What is this now? Finished goods. देखो हिंदी में सुनो, ये टोटल वर्क इन प्रोग्रेस था। वर्क इन प्रोग्रेस में से कुछ वर्क इन प्रोग्रेस रह गया, तो बाकी का क्या हो गया? वो कन्वर्ट हो गया। कन्वर्ट हो गया मतलब फिनिश गुड्स बन गया। तो ये आपका फिनिश गुड्स है। आप क्या करेंगे? ऐड ओपनिंग फिनिश्ड गुड्स, लेट्स से 3,500. So add this plus this. This is your total cost of finished goods. From this finished goods, again, we will have some closing finished goods. I'll explain in Hindi. That way, then you will understand better. 4,000. So if you deduct this, what you are left with? Cost of goods sold. भैया सुनो, ये मेरे पास क्या थी? टोटल फिनिश गुड्स थी, उसमें से इतनी फिनिश गुड्स रह गई, बाकी क्या हुई? वेज थी। यही तो हुआ ना। आओ ऊपर चलते हैं स्टार्ट में। आई हैव टू एक्सप्लेन इन हिंदी। इतना पहले का रॉ मटेरियल पड़ा था, इतने का मैंने खरीद लिया, तो ये मेरे पास टोटल हो गया। टोटल रॉ मटेरियल में से फिर कुछ रह गया, भाई पिछली बार रह गया तो इस बार भी तो रहेगा ना कुछ रॉ मटेरियल। इतना रह गया तो बाकी का क्या हुआ? कंज्यूम कर लिया। फिर हमने डायरेक्ट लेबर ऐड कर दी। ये तो था सिर्फ मटेरियल कंज्यूम करना, ठीक है। कंज्यूम किसने किया? डायरेक्ट लेबर ने। तो जोड़ देंगे तो क्या बन गया? प्राइम कोस्ट। प्राइम कोस्ट में फैक्ट्री के सारे कोस्ट ऐड कर दिए तो क्या बन गया? वर्क इन प्रोग्रेस या कॉस्ट ऑफ मैन्युफैक्चरिंग, ठीक है। इसमें ओपनिंग वर्क इन प्रोग्रेस यानी कि पिछले साल का वर्क इन प्रोग्रेस जोड़ दिया, जो पिछले साल भी तो ऐसा आइटम होगा ना जो इन प्रोसेस होगा। वर्क इन प्रोग्रेस क्या होता है? ना रॉ मटेरियल है ना फिनिश गुड्स है, उसको जोड़ दिया तो टोटल वर्क इन प्रोग्रेस हो गया। अब इस टोटल वर्क इन प्रोग्रेस में से कुछ वर्क इन प्रोग्रेस फिर रह गया। भाई ये वाला तो यूज हो गया, ये जो 1200 ये यूज हो गया, लेकिन जो इस साल परचेज किया उसमें से कुछ रह गया वर्क इन प्रोग्रेस, तो बाकी का क्या हुआ? फिनिश गुड्स। इतना टोटल वर्क इन प्रोग्रेस था, उसमें से इतना रह गया वर्क इन प्रोग्रेस, बाकी क्या हो गया? कन्वर्ट हो गया फिनिश गुड्स में। पहले के कुछ फिनिश गुड्स थे जोड़ दिए तो टोटल फिनिश गुड्स बन गए। अब टोटल फिनिश गुड्स में से फिर कुछ फिनिश गुड्स रह गए, तो बाकी का क्या हुआ? बिक गए। तो जो बेच दिए उसकी कॉस्ट आपको क्या थी? दैट इज कॉल्ड कॉस्ट ऑफ गुड्स सोल्ड। इज दैट क्लियर? दिस आल्सो यू हैव टू राइट ऑन पेपर and submit the solution. Submit it on WhatsApp. लिखिए। Everyone, have you understood? Ashish, you have written total manufacturing cost. This work in progress, this we can call manufacturing cost. Cost of manufacturing. इसका
तो जैसा यहाँ पर डायरेक्ट लेबर है तो अगर इनडायरेक्ट होती तो वो लेस करे
क्या बात कर रहे हो? इनडायरेक्ट यहाँ पे आ गई ना आपकी फैक्ट्री ओवरहेड्स के अंदर।
सेल्स डबल
लेस करने का क्या मतलब? कॉस्ट तो सारी जुड़ेगी, डायरेक्ट भी इनडायरेक्ट भी सब जुड़ेगी। बट कॉन्सेप्चुअली हम जब प्राइम कॉस्ट की बात करते हैं तो उसमें जो मटेरियल पे डायरेक्टली लिंक्ड लेबर है उसको जोड़ा गया है। ये फैक्ट्री गार्ड नहीं जुड़ेगा यहाँ पे, क्वालिटी इंचार्ज या प्रोडक्शन मैनेजर नहीं जुड़ रहा है। फर्क समझ में आ गया ना? थोड़ा सा इस तरह की बात है कुछ। अब इसको ना, we have kept this cost sheet in simple format. It can be complicated. Like you bring some raw material, you return some raw material. You have purchased some raw material, right? Sometimes there are defects in the raw material. Then what do? You return it. So there can be one more line which we can add here. But to keep it simple, we want to discuss the simple format. I hope Excel part you have completed properly. Have you or not?
Yes, sir.
Online?
Yes, sir.
Yes, sir.
Okay. By tomorrow morning, probably I'll WhatsApp which model we are going to cover in the next class. Maybe I can add one another model instead of Kellogg's or Tata Motors or other. Because if we are removing one model, we should add one more. What happens when we add models in the program? It is a kind of motivation for the faculty. If I teach the same model in every batch, it's very monotonous. Clear? And we are also not learning that way. Okay. I have seen there are couple of institutes. For the last 10-12 years, they are teaching the same model, same, no change. Even the data which they are taking is also old one. Especially in case of valuation, we take the data as on date of the class. And they are taking some 5-6 years old data. If their students have come to me and after paying there, they started training with me also. And there some of the students, after taking training from them, they took placement assistance from me.
हाँ सर वो प्लेसमेंट के लिए भी
अलग से चार्ज करते हैं।
जैसे मेरे घर के वहाँ पे है एनएसपी में बहुत स्ट्रिक्ट
मैं उसी की बात कर रहा हूँ। सेम डेटा मॉडल भी है उनका मेरे पास। हाँ जी, वो बात भी नहीं करते वीकडे में। कई बार मैं भी नहीं कर पाता हूँ, कई बार बात मेरी ट्रेनिंग चल रही होती है तो नहीं कर पाते हैं। तो लेकिन सुबह बात करेंगे या फिर रात को बात करेंगे या मैसेज डाल के आपको इन्फॉर्म करेंगे भाई कल 11 बजे बात करना है कि नहीं। I want to tell you one thing. If you are not studying in the last 3 weeks, please start reading from today. If you are not working on your LinkedIn profile in the last 3 weeks, start working from today. If you start after 2 months, your day one will start after 2 months. Now, what do you want? Tell me. Do you want to start today or after 2 months? So, 1 hour, just 1 hour for my course and 30 minutes for LinkedIn. Now it is not compulsory. This is minimum. If you can spend more time on LinkedIn, I'm saying LinkedIn, listen carefully, not Instagram, Facebook, YouTube. Clear? 1 hour to study my content, which I tell you, and 1 hour, 30 minutes for LinkedIn. Okay. When you are on LinkedIn, be focused to what you want to study there. Just follow me first. Okay, there are people who tag me. They put some content related to study, educational purpose. Study them. And gradually in next 10-15 days, you will find people whom you would like to follow. There are people, very qualified people than me. They share brilliant content. Sometimes they share the entire book, a PPT of 100 pages, they share. Okay, so follow those people and be focused in your approach. It should not happen. You see something, you click and then you go somewhere, and there you are scrolling for 10 minutes and then you click and then you are going somewhere. Then this is not the best approach. You are wasting your time. And this is what I don't want. I want you to be specifically clear what you want to study on LinkedIn, what you want to study on YouTube. There is nothing to study on Instagram, nothing to study on Facebook. If you can eliminate that time wasted, I'm not saying time spent, time you are wasting on Facebook or Instagram, you should eliminate it or you should reduce it by 90% for just 3 months. I will make sure that you all get the right kind of profile, provided you are following the simple principle: 1 hour study, 30 minutes LinkedIn. Is that clear? And don't study here and there things. Study which is relevant. 1 hour study of the content which I will tell every week, that this is what you have to study before next class. For Tuesday, I have told you. And for next Saturday, I'll tell you tomorrow. Next Saturday, which model we are going to create in class, I'll tell you tomorrow. Is that okay?
Yes.
Fine. Next. There is a topic called stock-based compensation. And this is the last. After that, I'll take a couple of questions related to financial statements. And one more thing. I will share one PDF or PPT with you, which has 40 or 50 questions with answers. Those questions are on financial statements only. If you just read them just like newspaper, nothing will flow in your mind. You won't remember anything. You have to be very patient in understanding those questions and answers. Clear? They are impact analysis questions, and they are very definite to be asked in those interviews. Without questions which I'm giving, without those questions, you will not be able to clear the interview. Make sure that. In 5 minutes, I'll let you know what those questions are. So first, we are talking about stock-based compensation. So we are actually going to talk about ESOP. What is ESOP? Employee stock option plan. You understand that? Employee stock option plan. So options have a contract life. Let's say contract life or life of an option, whatever you want. That is, let's suppose 7, not necessarily 7 always, right? So 4 years. And then 3 years. So what is this 4 year? This 4 year is your vesting period. And this 3 year is your exercise period. Got it? So company has, what company has done? Company has, let's suppose, employee 20. Okay. Option company has given per employee. How much? Let's say 15. Value per option is, let's say, 10. Is it clear? Total employees 20. Option the company has given per employee is 15. Value per option is 10. So what is the total value? Look, total employee into option per employee. So these are number of options. So what will be the value into 10? So this is the total value. Now, what will be stock-based compensation? This minus 4, that vesting period. So 750 is what? This is your stock-based compensation for year 1, year 2, year 3, year 4. In all 4 years, total stock-based compensation will be 3,000. Every year we are reporting 750. Did I make my point clear? Now what will happen? This will be first deducted in the income statement as 750 minus. Then profit will be minus 750. Then retained earning, retained earning will be minus 750. Just above this, we have an item called additional paid in capital that will be plus 750. So effect is 0 now. In the cash flow statement, profit is minus this 750. I will add this 750 back. So cash from operation is no effect. CFI, no effect. CFF, no effect. So surplus deficit, no effect. So finally, on cash, there is no effect. So what finally has happened here? Retained earning has gone down, but additional paid in capital has gone up by 750. Same thing will happen in second year. 750, 750. This will become 1500 because you are accumulating it. And this will be minus 1500. Here, this will remain same because this is a yearly figure. So in second year, this is what will come. In third year, again 750, 750. And this will become 2250. And this will be minus 2250. In fourth year, 750, 750. And this will become 3000. This will become minus 8000. Did I make my point clear? In fifth year, what will happen? Some of the options will be exercised. Right or wrong? Because in first 4 years, options will not be converted. Because this is vesting period. This is a lock-in period. After fourth year means from 5th to 7th, option can be converted into shares. So in 5th year, there will be, by mistake, we have made it 4. Actually, contract life is 7. So total is 7 years. So 3 years of exercise period is there. So what will happen now? Options converted to equity at 40 rupees each. How many options? 20 options converted to equity at 40 rupees each. So what will happen? In income statement, no effect. In balance sheet, what will happen? Common stock will come. How much will be my common stock? No. 20 options into 10. Face value of 1 share. That is common stock. Remaining 30 rupees is your premium. Where that premium will go? In additional paid in capital. In additional paid in capital, we have 2 items. One is SBC. Another is security premium, right? So how much is security premium? 20 into 30. Clear? Now in SBC, how much it was earlier? 3000. So this 200 I will deduct from SBC. Clear or not? Pakka? What we did, whatever common stock we have added, sorry, security premium is 0. I will have to write option proceeds. And option proceed is 20 into 40. By mistake, I told you. Security premium will not be reported in this case. Rather, we will record option proceeds. This 200 of common stock which we are reporting here, which will actually be sourced from SBC. This SBC which we have created in last 4 years, the purpose of this was to use it for common stock later on. It was a kind of provision which we created for 4 years. From 5th, 6th and 7th year, we will use it for conversion. Is it clear or not? Let's do it again.
Next year.
Next year we are doing again. 30 options converted at 60 rupees. Okay. So what will be my common stock now? No. 200 opening common stock plus 30 into 10. Clear? SBC, which was earlier 2800 minus 300. Now, option proceeds. Earlier it was 800. Now 30 into 60. And this amount will be added in cash on the right side. Earlier, how much it was? 800. Now again, whatever amount we have added for option proceed, that will also be added. So 30 into 60. Is it clear or not? Right? So this Excel file I'll share with you. I am going to Ankur sir to start your session on that. Anything that you want to ask? Okay. I'll give you some another homework, but not today, but just to let you know. What we have discussed in class is the international format of financial statements. Indian format is different. That is as per Schedule 3. Part 1 is balance sheet and part 2 is income statement. It is different. If you want me to cover that in class, it will take 20 minutes, 30 minutes. So I'll cover in the class. Otherwise, I'll share with you the PPT. Just go through it. Okay. As of now, let's not get confused with 2 formats at a time. So learn one format, remember it properly. Then the next format can be covered and differences can be taught. Okay. Sure. Thank you so much. You want to make note of it, you can make a note of it, or I'll give you this Excel file.